Hey traders, Raghee here, and in this free video we're going to talk about how many times different futures markets can give us insight into different ETFs and stocks, and how sometimes those stocks can be complementary or even better trades sometimes. I'm going to run you through a quick look at crude oil. We've been short crude now since, well, 2 days. We had 2 opportunities to take advantage of this overbought level. So let me walk you through how we know this is overbought. The moment you see the blue grab candles, even within the context of what has been weakness, realize that we're going to keep the bias of the previous trend, meaning we're going to respect the trend that was and be more aware of overbought and oversold levels, meaning we want to sell resistance levels with an overbought stochastic or even tools like the simpler trading ready aim fire. So we short that area. I'll use a stochastic very often. I'll use, as you can see here, the Darvis high, and I'll use that area just in front of 48. I love those levels. It gives me plenty to have at my back to expect the market to exhaust and sink back down into the range. As that's happening, I have what's been a much better looking trend, which recently transitioned in the OIH. Now, OIH is an interesting story where here's another good lesson. Did the market transition? Yes. Did we start to print blue and even a green grab candle? We sure did, but here's the thing. Longer term time frames, namely weeklies and dailies, do not take aggressive trend breaks. In other words, if a daily time frame downtrend breaks, do not treat it like an uptrend. Treat it like sideways chop and keep the bias that you had, where you start to look for more conservative levels to short from. Here I used a previous high. There's a Darvis in this area, actually 2, to use as a ceiling, and I shorted that ceiling. Well, I would not have been as confident to short that ceiling had it not had the previous downtrend, had I not seen the Darvis, and had crude oil not had its own overbought short that lined up with it. So you notice a lot of times when you really have the pulse of certain currencies and certain commodities, it gives you a tremendous amount of insight into certain stocks and ETFs, and it just opens the market wide up. So here's a great winner, and a couple ways you can understand how having a few anchor symbols open up the market to better fills and follow through. I'll see you in the next update.